Hello, everyone. In this video, we will be covering portfolio construction as it pertains to cryptocurrency. If you have not invested in any altcoins or Bitcoin, this video will help you out. It'll help you think about position sizings. It'll help you think about risk. It'll help you just manage the whole thing all the way through the bull cycle that we are going to be in or are in, depending on who you ask. The recent pullback in the market is the perfect opportunity for you to start loading up your bags. Would have been better 3 months ago, but if you haven't done it, now is the time. And this video is for you. I want to show you guys where I got the inspiration. It's based on a video from Lark Davis. I will link in the description. And go ahead and like and subscribe to his channel as well as to my channel. It was great for portfolio construction, and a lot of people do what he suggests. It's a very industry-wide what he's talking about. So the first portfolio is a blue chip portfolio, right? This portfolio is low risk and low time. You want exposure to cryptocurrency, but you don't have time to research. You don't want to manage anything. Maybe you have a long-term strategy. And people, they just have Bitcoin and they have Ethereum, right? Those are the two main cryptocurrencies. So 50% Bitcoin, 50% Ethereum. This is very low risk. Not a lot of upside compared to other altcoins, but also, Bitcoin is going to be there for a long time. Ethereum will outlive many cryptocurrencies. It just will. So this is the first kind of portfolio, blue chip. The second portfolio, mid-risk, mid-gains portfolio. And this portfolio, to use Bitcoin and Ethereum as a base, is 10% Bitcoin, 10% Ethereum, and 10% stable coins. So stable coins like USDT, USD, this holds its own value, right? It's just $1 or whatever currency you happen to be in. But 30% of the portfolio is very stable assets. As it suggests, is mid-risk, mid-gains. And so that 30% is supposed to give you stability when your altcoins are going nuts and going crazy and up and down and all around. What makes it mid-risk is the type of altcoins that you're buying. This altcoins listed on here are not suggestions; they're just fillers. But it's let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So it's 10 slices of the pie. 7 of them are in, you could call them mid-risk, right? What to allocate into that mid-risk? This is a personal question. It's like, what do you think you would be able to know? Or what do you want? What are you willing to find out? Are you a gamer? Then you should buy gaming coins. Are you into DeFi? Then you should do DeFi. Are you into AI? You think the AI narrative is going to be big? Then you should do AI. But I always like to think of it, what am I willing to know? As like a YouTube creator, I know that I'm going to make videos. I'm going to start targeting AI for myself. I'm going to make a lot of deep dives into AI coins just because that's what I want to know about. So I'll have an allocation to AI. I'll have an allocation to gamer coins because I think I could tell if a game is good, right? Even though I don't really game anymore, I think I could tell when a game is good. I think I haven't lost that. And, just ones that you think will perform well. You don't have to have 10 different coins per se, but they should be a combination of what you're willing to know, what you're willing to find out, what you know, or what do you think will be good, right? And 30% is in safety, Bitcoin, Ethereum, stablecoins, right? This is a mid-risk portfolio. This one is a barbell portfolio, and this is kind of the portfolio that I'm looking at doing. It's 25% Bitcoin, 15% Ethereum, 10% stablecoins. Some people don't have stablecoins, but stablecoins are a good idea because you always have money to reinvest, right? So this is a barbell portfolio. This is a high risk portfolio, high time investment portfolio. The mid risk is also high investment, high time, but this one is even more. This is super time, like, as I'm willing to read. I'm willing to follow things on Twitter. I'm willing to keep up with the market. I'm super invested into it. So this one makes more sense for me. What is interesting about that is that 50% is essentially instability, as stable as cryptocurrencies can be. 50% in Bitcoin, 15% Ethereum, 10% stablecoins. These small caps of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's got 10 altcoins and a lot more different allocations into DeFi, into DPEN, if you don't know what that is, decentralized physical infrastructure, um, into a lot of meme coins, into a lot of different ones. This one is high risk, but 50% is instability. So in this one, you can expect, two or three of them go to zero. You can expect, three of them go do okay. You see some 2x, 4x, and then maybe one or two of them go 100x, possibly, right? This is a high risk portfolio. This is the one that I'm going to be doing. This is for people who have time and have the interest to do it, right? So this is what I think most creators and YouTubers out there have, because it's high risk, but they're willing to spend the time. They're willing to take the risk. They've been through a bull cycle before. I've been through a bull cycle before, and I think I can manage it a lot better because I have that experience. But even if you don't, having 10% allocation to stablecoins, you can reinvest. But if one of your pieces of the pie is too high and it's by design supposed to be 5% at any time, then you can take a profit. So that's kind of, these allocations kind of take the profitability into it, because if it's too big of a piece of a pie, you're supposed to cut it down to size, and that helps you be stable. It helps you not go nuts, because you're going to go nuts with the whipsaws, up 20% one day, down 40% one day, up 60% the next. I mean, it's nuts how it goes. So these allocations help you stay afloat during chaos. And then this is a funny one, I think. The YOLO portfolio. Death and glory. YOLO. You only live once. This one is for crazy people, right? If a mid cap is between, like, what is it, like 50 million? Yeah, 50 to 60 million, all the way down to 10 million is for the high risk. This is even less. Less than 10 million is like a coin that probably is going to rug pull you. But if it doesn't rug pull you, then it'll make a ton, right? It's a brand new coin, untested, not on exchanges, probably on Uniswap or in a DEX somewhere, or maybe they just airdropped, or who knows what. But it's an untested coin, could be massively good, could rug pull you. And this YOLO portfolio, I don't recommend anyone do this. If you've made a lot of money and you want to YOLO a little bit towards the end, maybe that's okay. The small cap coins are just so risky, but they could make you a lot of money. I mean, but you got to expect some of them are going to go to zero, and you're going to see whipsaws. You're going to see 40% down. You're going to see 2x, then you're going to see 3x down, then you're going to see 10x. It's going to be nuts. And NFTs, if you're into NFTs, if you want to research, this is the highest level commitment, the YOLO, right? This is for an expert who knows what they're doing. This is not for a new entrant. If you're a new entrant, don't do this. If you're a new entrant, just do the mid risk, or do the Bitcoin and Ethereum. Once you get a little more experience, you should do something else. And it's really easy to get all emotional if you haven't been through the ups and downs before. If you haven't felt that pain, then you don't know what I'm talking about. But trust me, there's going to be a lot of emotional pain associated as the market goes up, as the market goes down. I want to show this to you guys. This is Live Coin Watch. In the last 7 days, and 24 hours, the market has gone down. BTC has gone down, currently around 66,000. But the market in general is down, and so is the stock market. They trade in tandem. They're equal. A lot of people call Bitcoin a leading indicator. That's your Harvey Dents. But the market is down. So if it goes down more substantially, it would be a good entry point for someone who does not have allocations right now. I'm going to show you this too. This is the original video, the best crypto portfolio, where I got the images of the pie graphs on the types of portfolios. You should watch this. Link in the description below. You should subscribe to Crypto Andy and also subscribe to Lark Davis. This is another guy. I think I want everyone to watch this video. Watch his video first and then watch this video, because this video deep dives into the allocations that he's making, the virtual baking guy. And he's like an angel investor in over 100 cryptos is what he says. He's a crypto millionaire. And he really goes into detail into why he bought this crypto, how his thought processes were. I watched this video twice and probably gonna watch it a third time because it's that good. It's like what he looks for. Is there community engagement? Is there milestones? Is there a narrative around the coin? And he's a computer science background, so he can go even further. He can go into, is this technology better than this other technology, and why? Because you understand the ecosystem. And people who you can figure that out by using it, right? You can see, oh, this DEX is easy to use. Oh, this DEX is not easy to use. You can make things like that apparent to you if you have those technology backgrounds. I'm a IT technician background, but still, crypto is just so different. And an angel investor who invests in coins, he would really know why one coin is better than another coin. And a strategy that I learned from watching Shark Tank was, if you think someone is an expert at something, you can steal away what they think is good, right? So you can steal away some of his picks so long as you don't think they're conflicting, into coins that he's invested in personally. But if he's invested in them personally, another way to think about it is like he's putting his money in there. He is high conviction, right? And I suggest you watch this video 2 or 3 times and really get into the mind of what you look for, why you look for it, if you're serious about it. Watch both of these videos 2 or 3 times. I watched them 2 or 3 times. I think I'm gonna watch them two more times because they're that good. I know they're that good. Something else I want to show you guys. This is from the Wealth Mastery course from Lark Davis. He's got a course if you guys are into that. This is from Coin Bureau. He's another popular crypto YouTuber, and just in the coinbureau.com, he just covers a lot of really good tips on what to do, how to think about it. If you subscribe to the Coin Bureau, he now and again will give you his crypto portfolio. And I'm going to give you guys a short list because I know it's overwhelming with the amount of coins on what to buy. I'm going to give you like a short list. This is not financial advice. You need to do your own research. You're ultimately responsible for what happens to your coins. You could lose them all, right? I'm going to give you a short list though, just as a starting off point. This one is from Virtual Bacon, into that video 2024 portfolio, which I recommend you watch. Can you recognize what it is? 25% Bitcoin, 25% Ethereum. And this is the barbell. He has a barbell. I think I put it in here, barbell. And I took notes on what his allocations were on the sectors that I want to be in, that interest me, because I don't have like a broad spray like he does. I have more, these are my interests. I'm going to make videos on these. And that's why I feel comfortable, investing in them, because I'm willing to find out. So he has a barbell portfolio, which is a high risk portfolio. It's not a yellow portfolio. The guy who's been at it for years and years, angel investor, does not have a YOLO portfolio, and neither should any of you. If you happen to hit it big, I hope you do. I'm happy for your success, but you may fail too. So his allocations were 25% Bitcoin, 25% Ethereum. This is a $100,000 portfolio. Then he's got Arbitrum, Optimism, and Polygon. And ZSync. And so he's very invested into the layer 2. There's a layer 2 narrative with a Dinkan update. I made a video on Dinkan, and you can watch that on what Dinkan is and how it benefits layer 2s. ICP Computer is his layer 1. Celestia is his layer 1. Layer 1 DeFi is Neutron. Injective And I'm just you can pause the video and just get this from the screen if you want to look at it. But watch the video. It's a long video. It's like an hour long video, but it's gold. Trust me, it's gold. This is from the Coin Bureau. But this is I'm subscribed to his newsletter. Subscribe to the Coin Bureau too. He's really good. But I think the difference between Lark Davis, Virtual Bacon, and Coin Bureau is Lark Davis and Virtual Bacon are trading channels. They're about investments and how they're managing their investments, right? They have computer science backgrounds. The Virtual Bacon guy does, and Lark Davis, he's been angel investor, and the Coin Bureau is more of a news channel. He might have, the Coin Bureau guy may have done angel investing. I don't know, but his channel is a news channel. It's more about what's happening. And he goes into really great detail at Coin Bureau. He inspired a lot of my videos, like, and why I go into that level of depth. Whereas the other guys are more, they just talk and it's easy to understand. With Coin Bureau, it's very condensed information rich. It's great information, but it can be hard to digest just because of how compacted everything is. And you may feel overwhelmed, is what I noticed. Sometimes a little simpler, chatty sort of conversational style is best. But this is his allocations in November, so it probably changed, right? It's not financial advice. 42% in Bitcoin, 30% in ETH, USDT, and the USDT really tells me he had not done a lot of allocations. But look, he got Sol, and Sol went up like 7x, so that was a great one. This is a short list for you guys, so you can start here and then trim this down. But a lot of these picks are really good picks. Chainlink is the best Oracle out there. Axelar is a lot of people think Axelar is going to do great. You need to do your own research, and you need to cut this list down into what you know or are willing to find out, and just be very common sense. My personal struggles with their portfolio construction came from not taking profits. And I will also look into finding a trading system for you guys. A trading system has entry signals and has exit signals, right? It tells you when to sell. And at some point, the risk is so high that you just don't even want to be in the market anymore. A lot of the cryptocurrency gains and losses are 100% tied to liquidity and financial markets, including the US 10-year yield and 2-year yield. The liquidity in the markets are 100% due to what banks are doing, Eurodollar banks. So what you can do, you can get on a trading view and you can go on bond, just click on bond and then click on the 10-year yield. And notice how as the bond market is 10-year yield is increasing, meaning that bonds are more expensive. The ones that are being sold are more expensive. There isn't selling pressure. Selling pressure makes the bond prices go down. So whenever the bar for the 10-year government yield goes up, when the percentage is higher, when it's more expensive to borrow, essentially, to buy bonds, then you'll see the markets dip. And I had that pulled up with Bitcoin. So the US government bond, right? And here we can put Bitcoin. And if you look, see how as this has gone up, right? As it started to go up, then the market went down. It's like, it's not always 100% in that way, but often it rhymes. And the less liquidity that there is out there in the bond market, the worse that high risk assets like cryptocurrencies do. And Bitcoin and cryptocurrency are 100% tied as a risk asset to the stock market, to the bond market. They haven't broken off. Maybe at some point they will, but they haven't, and they're not going to break off suddenly in the next year and a half. So the whole time you should look at liquidity. And there's a guy that's really good with that I like on YouTube. It's Greg Manorino, and he's a little conspiratorial, but he looks at that all the time. He looks at the fact that the bond market will be your guiding light as to what's happening and why. And I just proved it to you, right? As the 10-year yield went up, the Bitcoin went down. Bitcoin is the most reactive. And if you have a trading system, if you learn about portfolio construction, then you can trade anything, right? You could trade the stock market, you could trade the bond market, you could trade the crypto markets. I love the crypto markets for many reasons. So I have a lot of attention there, but I do trade other stuff, the regular stock market too, is where I first got into it. And then I got into crypto. I think crypto has the most gains, but also the most risk. So having proper risk management is super important. In a lesson for me in the last bull run, I had made some money, but I got into it too late. And I'm earlier now. If you get into it today, then you're earlier. I'm earlier than I was, but at some point you're going to have to just sell everything, and you're going to have to be happy with what you got and not be greedy. And following, a trading system will help you with that. So if we go, okay, this is October. Let's go just peek at, was it November 2021? Right? The last peak, right? So as the bond market rose, we had the peak. Right? So see how the bond market went down, and then boom, there was a price explosion in Bitcoin. And then as the market kept going up, risk kept increasing, right? It was a topping signal, and eventually, right here. This is a W bottom, by the way. Right? This is a W bottom. Once this price exploded upwards for the bond market, you knew the market was dead, right? At that point, this is the low point. But you might have known that the end was near when this market started to peak, when the bond market started to peak, and it was consistently going up. You knew the end was near, right? And you might want to sell everything at that point. So just keep an eye on liquidity. Liquidity will tell you when it's time to get out, and your trading system will tell you when to sell. It'll have an exit signal. And your portfolio construction will keep you having to take profits when something is too big. So you need all that stuff. And if you're doing it blind, like I'll just know, then you'll lose. 90% of all people, according to a video I saw with Lark Davis, will not sell, and they'll cry. They'll say no to hundreds of thousands of dollars. Maybe some people have millions, tens of thousands of dollars. Most people, millions of dollars, some people. And you'll cry that you couldn't buy a house or a car because you didn't know when to get out, because you didn't follow the 10-year yield. You didn't follow your portfolio correctly. You have to get out while you're up. When the chips are up, at some point, yeah, you could make more money, but the risk is too high. And as what I learned is follow the bond markets, follow guys like Greg Marino. When you see the bond market taking off, that's a signal to start taking profits, and you need a profit taking strategy. And all of this has to be done in advance. And if you don't do it in advance, you're dead. You won't make money. And so this video is for newbies, the more experienced guys. Like me, I'm a bit more experienced at this point, and I've got the scars to prove it. I would be better off if I had sold, but because I went through that, I know it today. So I'm going to be more successful than someone who hasn't done it. Some people get lucky. Most people don't. I didn't, and probably most of you won't be. I hope that you are. I hope you make all the money in your success. I'm not jealous. It's just most people won't be. They just won't be. And you need to make sure that you do what you need to do to have your money and be happy with, have a good experience, and you can do it. I just outlined things that I wish I had known. So if you like this video, like and subscribe to the channel. I hope that you got a lot of value out of it. I definitely enjoyed making this video for myself and for anybody else out there.